So this is a continuation of the previous discussion that we had around NFTs during last month's CIO newsletter. So as you know, we do carry a relatively large liquid yield position that we try to strategically allocate. Now, historically, this has been through different types of lending platforms and so on. But we have been exploring both DeFi and NFT type of yield options. Now, I'd like to start off with this NFT discussion on some of the risks around NFTs. A lot of times, investors will see NFTs as sort of a silver bullet into generating some type of yield or having an asset that will definitively accrue value. Now, while this can be true, if you're, let's say, a social media influencer or a musician and such, and if you have a pretty large following, really substantiating the scarcity of the asset can be, and allowing it to actually have enough interest generated externally can be a challenge. And furthermore, because NFTs are largely traded on, platforms like OpenSea, which are a single point of failure in some cases, this is another risk to be very wary of. So to give you an example here, you may have noticed that in the latter end of January and earlier in January, there are a number of NFT hacks that took place where some of the Bored Ape collections, rather the Bored Ape NFT collection was hacked, and about $2.2 million were stolen of NFTs there. And then the same thing happened with OpenSea, where it was really a UI issue on the OpenSea side, but NFTs that were being listed there, or NFTs listed there, were being quoted at values lower than market value. So this did cause quite a number of issues. And while OpenSea did make a public statement that they would be reimbursing those values, it created quite a bit of mayhem, as you can imagine. So then what are strategic ways to gain exposure to NFTs? Well, there's two that we're heavily exploring right now, and that is through one of our partner exchanges, Kraken, and another one is through NFTs that operate as sort of income-generating assets, and we'll get to that in a second. Now, so let's start off with the Kraken use case. So here, we believe that having NFTs that we've done appropriate analysis around and lending those out and actually earning a yield on that lending would be one way to strategically gain exposure to an NFT, but then also to earn a predictable and repeatable yield on it. So this is something that we're doing R&D on right now. We are in touch with Kraken's team to understand the nuances of this marketplace they're launching. So this article explains how Kraken is launching an NFT lending marketplace. So where you can not only buy and sell them, but you can actually lend them out as well. So this would be one option that we're considering. And then the second option is options like this. And this is Gary Vaynerchuk's NFT restaurant. So he'll be launching a restaurant called Flyfish in New York City next year. And essentially, it'd be possible to gain exposure to, or rather to essentially have an NFT that allows you to be able to gain access to this restaurant. And you can kind of think of this as sort of a country club of sorts. The reason that we think that projects like this are uniquely interesting is because it is more clear, and again, it is repeatable how this could generate a return. It's repeatable in that it's a scarce asset that can, unlike for traditional country clubs, actually be lent out, right? And so the asset accrues value in general just by existing, simply because the awareness of the restaurant increases, the amount that an individual is willing to pay for it increases as well, and for access to these types of venues, you can actually rent your NFT, and obviously there's a security that you have around that as well. Now, these are two of the many ways that we're looking into gaining repeatable yield-generating exposure to NFTs. So we'll keep you posted on all of this, and all of these articles will be shared in links below.